Well, hi, Andrew Bell here, and I've got quite a bit of information today. First up, the Australian housing market is experiencing a noticeable shift, with affordability driving unexpected trends right across different property types in the marketplace. Affordable house prices growth is now outpacing the luxury market, first time it's done that for a while, whilst the exact opposite is occurring in the apartments market. In the affordable housing segment, the widening cost gap between a newly built home and existing homes has further influenced buyer behaviour. Established properties in this category have seen heightened interest due to their relative affordability and location in developed neighbourhoods that already exist. This trend reflects a broader market adjustment, leaning into stronger price appreciation for established homes. It's why I have highlighted a number of inner-city properties over the past couple of weeks, as this is an ever-strengthening component of our market. The apartment market presents a contrasting trend to the housing sector, with luxury units outperforming more affordable options in terms of growth. This disparity is primarily driven by downsizers, typically older or retirees, who are less sensitive to interest rate changes due to their substantial equity or ability to make cash purchases. These buyers are often willing to pay premium prices for spacious, high-quality apartments that offer comfort and convenience. Unlike the affordable housing sector, the luxury apartment market remains relatively unaffected by rising construction costs. While developers struggle to build cost-effective apartments due to financial constraints, the premium sector can absorb higher construction expenses as affluent buyers are prepared to pay elevated prices. This dynamic has led to a continued growth in the luxury apartment market, even as other segments of real estate face challenges now. Now, whilst we have noted a modest increase in building approvals, and I do emphasise building approvals, not construction, it's resulted in us hitting a 15-month high in that area. What is interesting in the new construction space is that detached houses, and remember, they're detached houses, now dominate, taking up 62% of all new dwelling completions. The apartment market is losing ground, down 23%, whilst townhouses is holding steady around 15%. Again, as mentioned above, it simply gets too expensive to supply new apartments at levels that deliver what we call affordable apartments. Even when developers try to present a feasibility for a new development, they cannot get valuers to support the sale prices they are needing to achieve to proceed with the construction. Banks are also nervous, if not simply rejecting the concept of financing developers in the affordable apartment market. The risks are just too high for a bank. Because of all of the risks, there are hardly any developers or their builders in the marketplace. And indeed, any that can manage to build are generally building very small complexes, which means it's really having no effect or no dent on the huge demand that exists. It's only the likes of Meriton that can build big complexes and, in a way, supply rapid development of affordable housing or apartments that make any difference at all. It's only developers who actually have a building operation attached to their business that can get on with construction, and there's almost none of those. What we are seeing is a new trend emerging, and that is land size for new developments is shrinking, yet the size of new dwellings on the land is increasing. It's reflecting a growing appetite for more space, and otherwise what's been a market that's been generally geared towards smaller homes. I guess even though 22% of Australians live alone and another 25% live as a couple, it's puzzling as to why this trend is actually occurring. One might suspect that with the cost of construction, with people watching just how much they borrow, it's inevitable that this trend will reverse at some point. Well, moving on, bookings are really flowing on to be part of the event 2025. Many prospective sellers are reading the tea leaves and are feeling that this is the right time to capitalise on 4 strong years in price growth in the marketplace. Heads up, now don't get confused by a number of real estate offices on the Gold Coast that have used the event in their marketing. There's only one event, which is trademarked now. It's the greatest property marketing program in Australia. Last year, we sold 110 of 120 properties that were marketed throughout the January event period. With 30 plus years of proven success, it's not only the best time of the year, but the best way to sell a Gold Coast property. So don't get confused by agents trying to maybe suggest that they've got an event as well. To get more information, you'll see details on screen now, which will take you to a dedicated website with all the information you need. We have a limited number of spaces available, so don't delay in reaching out to us. No matter where you are on the Gold Coast, no matter what property type you have, we'll ensure you achieve the best results for your property. I look forward to being with you in a fortnight's time as we accelerate to the closing month of the year. My goodness, it goes fast. See you then.